Welcome to Currency Watch. This is Chris Keene from Keene FX. There was a brief burst of activity in early North American trading, and that represented the majority of the movement through the day. After the Bank of England announced that it was going to keep interest rates unchanged and not increase its contributions to the asset purchase program, the pair shot up almost 60 points to test the top of its trend line. Most of the majors followed this and moved up against the U.S. dollar and consolidated their gains through the remainder of the day. Heading into trading tonight, there's quite a bit of information or data releases that could influence the trading activity. The first is the Chinese CPI report, which is due at 9:30 Eastern Time, and that's followed in the European session by the German PPI and the Great Britain Pound PPI report. Both of these reports could have an influence on their individual pairs, but probably not risk sentiment as a whole. Going into North American trading, we have the Canadian employment report that could push the Canadian dollar above the 1.0050 area that has contained it for over the last few months if the report creates a upward pressure in the pair. If not, we could get a move back down below parity. And then the last report that's going to be released in North American trading is the University of Michigan sentiment report. This was the last data release of the week and could have an influence on early North American trading. Let's take a look at a few pairs that could be influenced or move out of the particular ranges in Asian trading. The first, as I mentioned, is the Great Britain Pound USD that moved up to trendline resistance in the 160-160 area. If we can get a break through this trend line, we could see an initial test of 162.10, which is strong daily price resistance, and then if we break through that, we could get a move towards 163. But I think that would be getting a bit ahead of ourselves for Friday trading. If the trend line proves to reject the pair once again, we could see a move down initially to the 161 area. The next pair of interest is the Aussie USD. As you can see, the Aussie has been contained by this descending trend line over the last week of trading. And after the employment report was better than expected yesterday, the momentum in North American trading pushed the pair above the trend line, but it could not contain any momentum above it, and it peaked out around the 101.34-35 area. But as you can see right now, after the close in North American trading, the pair is trying to break once again below this trend line resistance level. And if we get a support level now, if we get a break below this, we could see initially a break and hold below this level. We could see initially a push back down into the 10020 level, and then ultimately to parity to close the week out. If we do get a little bit of support here and we bounce higher, we could ultimately be on our way towards the resistance zone at 102.25 or 102.50. The last pair of interest is just because it had a bit of activity and it looks like it's a wedge, is the USD JPY. As you can see, the pair moved up 30-40 pips to open North American trading, which is a big move for this pair lately. But as you can also see that its channel support comes in, resistance is beginning to come into play, and we've been running on this 79.65 price level for the last week or so. So we have ourselves a bit of a wedge here. I would have to assume as long as the pair stays below this price level at this wedge at the in the 80-20 area, that the pair will remain in its channel and move lower. If we break through the 79.65 area, we could see a test of the 79 area. And that is a wrap for today's Currency Watch. So remember to keep your trades keen and play it safe.